from the Register of Deeds of Plymouth County. This show is about Plymouth County real estate. We're reporting on the numbers for the month of July. This show is being taped in August of 2022. Our headline for the month was Slow Trend in Real Estate Begins the Fiscal Year. I have a great guest coming on in the second segment of the show, Deborah Colanino of Shamrock Home Loans, talking about a very important subject at this point in time, the decline in refinancing and mortgages generally. So let's go right to the numbers. You're going to see a bar chart of the numbers of deeds. There were 802 deeds recorded in July, less than the 936 in June, 17% less than last year's 968 deeds recorded in July. In year-to-date, we're down 12%. So you'll also see an image of all of the sales throughout Plymouth County for the first 7 months of the calendar year. You can see July right there. It has slowed down since June, but that is pretty much the same across Massachusetts. The biggest drop we've seen is in mortgages. There were 1,578 mortgages recorded in July, less than the 1,811 in June, 40% less than the number of mortgages last July. In year-to-date, down 43%. We always track foreclosures, particularly since the meltdown of 2008. Foreclosures are creeping up. There were 7 foreclosure deeds in July 22, only 7 in June. We're 13% less than the 8 last July. Remember, during COVID, there was a moratorium in place. So even though those numbers are small, year-to-date, we're up 45%. Foreclosure notices are where the biggest increase have been. There were 39 foreclosure notices recorded in July, more than the 29 in June, but 388% more than the 8 foreclosure notices in July of 21, 150% more year-to-date. You're going to see an image of all of the communities in Plymouth County for foreclosure deeds and foreclosure notices. If someone's facing difficulty in finding themselves at a notice stage, reach out to a federal housing counselor to try to save your home. The faster you do it, the better off you're going to be. So we have a free property fraud alert on our website. If you go to PlymouthDeeds.org and go to our resources page, you can see fraud alert. You can sign up with your email. Anything recorded against your name, you get an email, so you can cut down on potential scams. And just beware, there are a lot of people out there trying to take advantage of people that own homes. There are mailers that say we can get you a copy of your deed for $85. You can get a copy of your deed at one of our satellites for $1 a page. Just don't get tricked in anything that happens relative to your real estate. Be very protective of that. I have a great guest coming on in the second segment of the show. Deborah Colanino of Shamrock Home Loans will be discussing the current status of real estate in Plymouth County and specifically the mortgage market. So we'll see you in the next segment. Welcome back to the Register's Report. My name is John Buckley. I'm the Register of Deeds of Plymouth County. In this segment of the show, we always do something educational in nature. We've had surveyors, appraisers, many realtors, a lot of different people involved in the real estate business. I have a very nice and timely guest on the show today, as you know from my discussion of the numbers earlier as to all of the funkiness going on in the mortgage market. I have Deborah Colanino of Shamrock Home Loans. Welcome, Deborah.
Thank you, John.
So why don't you tell our viewers a little bit about how you got into this real estate business?
Okay. I actually started as a realtor in 1985 when my family was just growing. And I sold real estate and then became a real estate broker in '88. And then I did that for a number of years. And then I decided in the early 2000s, decided to make a change. And I switched over to the mortgage industry in 2005. And it was an eye-opening experience because going from real estate to the mortgage industry at that time really made me realize that it was kind of like the Wild West out there. In 2005, anybody could be a loan officer.
Mm-hmm.
There were no licensing requirements.
Right.
There was no educational requirements. So I firmly believe that had a lot to do with why we had the quote-unquote mortgage meltdown in '07 and '08.
Yeah, I was registered during the 2003,
Yeah.
2004 multiple refinance market.
Yep.
I was there during the 2008 crash, and I know exactly what you're talking about when they brought a lot of more controls
Yes.
to the mortgage market.
Yeah, then when the CFPB was formed and they created rules and regulations for loan officers and loan lenders and banks and everybody to follow, it did dramatically change how business was done, and it was necessary. I know people don't like regulations, but sometimes you just have to have them.
Yeah, so you started in this business at a pretty interesting time.
Yes, I did, and I worked my way through it. The companies were dropping left and right. And I decided to just ride it out. I got my license. I passed my test the first time, so that's good. And I just wrote it out, and I worked with a couple of different larger companies, and worked with a couple of lenders, brokers, and banks, trying to find what was the best fit for me.
Okay.
And I landed at Shamrock Home Loans back in 2011, and they've been in business for 31, 32 years now, and they're a family-oriented company. It's a smaller direct lender, but it gave me the support and the backup and the systems that I felt I needed in order to serve my clients to the best of my ability.
So where is Shamrock Home Loans based?
The main branch is in East Providence, Rhode Island.
Oh, pretty close, yeah.
Yep, and I have an office. I work in partnership with my husband, Frank Colanino. He came on board with me a few years ago. And we have a small office in North Plymouth, right over near Cottage Park, right on at 385 Court Street.
Oh, great.
And we've been there for several years, and it's a great location for us. Easy for people to find us, easy to access everything that we need. I am licensed in Massachusetts, but I am also licensed in Maine, New Hampshire, Rhode Island, and Florida.
Wow.
So I find that that my business brings me to those states more often than any other states. So I wanted to be able to serve my clients that way.
So we had a pretty interesting year during COVID,
Yes.
during 2021, and there was a lot of activity during that time.
There was a lot of
surprisingly.
uncertainty.
Yeah. A lot of what, I'm sorry?
There was a lot of uncertainty too.
Sure, right,
Yeah.
right. But a lot of people chose to buy homes during that period. We had the highest number of documents recorded for us since 2005, and it was surprising because everyone was locked down.
I think it gave people a lot of time to sit back and reflect on their housing status and where they wanted to live and what they needed as far as how they wanted to live. Did they want to live in the city? Did they want to live in the country? Did they want to work from home? A lot of people were working from home, and they wanted to make sure that they had a setup in their homes that was enabling them to do that in a reasonable fashion.
So what percent of your work during 2021 was purchase mortgages versus refinances?
We were very fortunate. 2021 was a really good, actually, believe it or not, 2020 was a great year.
Oh, wow.
It was odd because January, February, and March, which are traditionally slower months anyways, and then, of course, when we had the shutdown from COVID, everything kind of came to a grinding halt. But the second, third, and fourth quarters of 2020 were really, really good. And I had 65% of our were purchase, and the rest, the 35% were refis. In 2021, it went a little bit more towards the refinances, but we were almost 50-50 with our purchase and refi business. Because I have been doing this a long time, and I do know that refinances, when the rates are in the 2 and 3%, they're not going to stay. You have to keep in touch and keep your referral partners referring to you and service their needs as well. So we've been very fortunate, and this year we're, where the refi market has gone away because of the interest rate increases. It hasn't completely gone away. I'm at like 20% for refis right now.
Yeah. No, it seems like when the rates went up, it pretty much came to an end.
Yeah, there are still some people who are refinancing, doing like a cash out refi to pay down debt or to do home improvements, things like that. So there are still some people doing cash out refis so they can take advantage of the equity that has built up for their properties over the last couple of years, because we have had quite a large increase in values.
So how is it going exactly at this point in time? For us, and I know I was in the registry yesterday and today in the building, it really seems to have been slowing down.
It has slowed down. We've seen a dramatic decrease. I think it's an adjustment that needed to be done. We were looking at unprecedented low interest rates for a couple of years, and I understand the reason that they did it was, especially during COVID, was to try and stimulate the economy. And my own personal opinion is I think they left the rates a little too low for a little too long, and it overstimulated the home buying market. And so we had so many people thinking, oh, this is great. I can, get a mortgage for this amount because my interest rate is 3% or 3.5%. And so there were a lot of people, too many buyers and not enough inventory.
So who are the primary people that refer mortgages to you? The realtors or repeat customers?
In my case, it's almost 50-50.
Okay.
We have a good base of realtors that work with us on a regular basis. We have, I'm constantly gaining new real estate clients, referral partners, and that's through word of mouth from other realtors and from clients and that sort of thing. But I've been in the business long enough that I have good repeat business now. And again, word of mouth. We don't advertise. We're not, I don't find that we have a need to do that. But again, it's referrals from past clients and their families, and seems to be working out pretty well that way. We also work with attorneys, insurance agents, attorneys. Sometimes, sometimes we'll work with like divorce attorneys, and we can help them out with clients who are trying to either refinance or purchase, things like that. So.
Sure. So where do you see it going over the remainder of the calendar year?
Well, this year, like you said, it's been a little quiet. It usually gets a little quieter in July anyways, and what I have found over my years of experience is people go on vacation in July, they talk about real estate. When they come back in August, they start actually saying, I'm going to do this or I'm going to do that. So my experience is that my third and fourth quarters are usually better. People trying to get in before the holidays. So I think that people have adjusted a little bit to the fact that rates are a little higher than they were a year ago. But they also realize that interest on a rental is 100%.
Right.
So if you're paying high rent, which rents are very high right now, then you might as well bite the bullet and buy the house and make the investment in yourself instead of your landlord. And then when rates do come down, and they are predicting that we're going to see rates coming down within all of the mortgage gurus that I listen to and the blogs and everything, they're saying probably first quarter next year we're going to start to see. I've already seen a little bit of a reduction in the last 10 to 14 days. And people have a misconception that when the Fed raises the interest rate, that mortgage rates go up that
Right.
much. And that's not true.
Automatic, right?
Yeah, that's not true. The Fed rate does not affect directly mortgage interest rates. The bond market is really where you're going to be able to tell what's happening with mortgage interest rates. And even though the Fed increased the rate by 0.75, I believe, last week before, I've lost time, rates came down last week.
Yeah, I've been seeing rates go down.
Yeah. So that's a good sign. And I think that with the adjustments that they're trying to make right now to calm down inflation and steady things out as far as the supply chain and everything is going, I think we're going to see the beginning of next year will probably be, I don't think we're ever going to go back into the 3s. I think we're going to land in the 4s, which is a good, healthy economy and a good, healthy rate for someone buying a house.
I've had a couple of realtors on my show over the last couple of months, and they, as well as I, remember the days of 18% interest rates.
Yes.
So going from 3 to 5 historically is not that bad.
It's not that bad. And what people aren't realizing is that in 2018, not 20 years ago, just 5 years ago, 6 years ago, the rates were at 4.5% and 5%.
Wow.
So historically, we're looking at recent rates that were unrealistic and unsustainable for a healthy economy. And so now that the when they adjusted very quickly, they went back up too fast, shook people up, and people kind of said, whoa, let's stop and see what's happening. So I think it's starting to come back around, and we're going to see a good fourth quarter this year and a good first quarter next year.
I still see one of the two biggest problems. One is that people aren't making a move. They're not going through the normal cycling of going bigger or going smaller because they're so afraid that if they sell the house, they have nowhere to go. And the lack of inventory is really harming it that way. And my second biggest fear is we're not really allowing a new generation of homeowners to come along because of some of those factors.
It is kind of a catch-22 because a lot of the people who refinance their houses and now have 2.75 interest rates, if they sell that house and unless they're paying cash for the next house, they're going to be at 5%.
Right.
And so they're not putting their houses on the market. And so it's a continuous, so we don't have enough inventory, and so people aren't listing. So we keep not having enough inventory. We have had an increase in the last 30 days or so of having more inventory on. I think people are finally realizing, all right, this house just isn't going to work, or we're going to sell and we're going to move to Florida and retire or something like that. So I think we're going to see more inventory. I think the biggest problem is when we had the recession in 2008, a lot of builders just stopped building. And so we got behind on available housing. And if there's no available construction, there's more and more people being in a position to buy, but there's not enough properties for them to buy. We need to start doing more building.
So let's say there's a viewer out there that's looking around to buy a house. They obviously being told by everyone, get pre-approved.
Yes.
What should they be doing with a company like yours?
Well, realistically, you can't start too soon. All right, people are always like, well, I have a lease on my house and I've got another 6 months before the lease is up, so I don't want to do anything yet. Well, now is when you should start planning this a year ahead, because you may have credit issues that you need to improve. You may have down payment issues that you need to improve. I have programs available that you can use with 3% down. I have programs available with no money down. But you have to have the right credit score, you have to have the right debt to income ratio, and if you don't start early enough by finding that information out. So the biggest mistake you can do is to wait too long. It's never too soon to start finding out. Reach out to, if you wanted to reach out to me, we would start by running your credit, taking your income. Getting a mortgage is kind of like a great big jigsaw puzzle, and no two are alike. and we have to piece it together and make it work for your individual circumstance. So start soon. Don't be afraid of what I'm going to tell you today, because we're going to take you from here to there, because you may be here, but this is where you want to be, and I'm going to tell you how to get there.
What is the average length of time for somebody to get from a first meeting to an approval letter?
If I can get the correct documentation from them, the faster they get me their documents, because the first talk that we're going to have is a pre-qualification, and I'm going to ask them a lot of questions. Then I'm going to run their credit, and then I'm going to ask them to send me pay stubs and bank statements and things like that.
Okay.
So once I get the pay stubs and bank statements, I can get that to them within 24 hours.
Wow.
Yeah.
So let's talk about, futuristically, what do you see as changes in the mortgage market? There clearly were tremendous changes as a result of the meltdown in 2008. Are there technology issues? Are there mass movements nationally, like the Walmarts of lending and all that kind of stuff going on out there in the marketplace? What do you see happening over the next 5 years?
Well, we've had a lot of change, obviously, and right now you're seeing there's several choices when it comes to lending, and when you go to get a mortgage. You can go to the online lenders, and generally speaking, you don't know who you're going to wind up working with. You're not going to have the same person every single time. You have to decide, do I want to work with someone who's going to give me a personal perspective, personal service? So the changes are, I think you're finding less people going to the online lenders because they're finding it's not working as well. As far as real estate, there's all kinds of new things on the horizon. There's a whole system called blockchain.
Oh, I've heard of that.
And they're predicting that within the next 5 years, we're going to be doing closings using a blockchain system where the realtor, the lender, the closing attorney, the insurance company are all connected on the internet, and you can close, you can submit an offer on a house and close within 48 hours.
See, many times when they talk about that, they include the registries of deeds in that mix, and that's not going to happen that quickly on our end.
Yeah, I'm a little concerned that it's
we-
going to have
we-
a large.
We move slower because we want to get it right.
Right.
The laws are, in some cases, pretty archaic. It could well happen, at the financing end.
Yeah.
But I just don't see it, soup to nuts being.
Yeah, I think it's one of
that's
those
a-
things that's going to take a few years to work through
Yeah.
the issues, but
Yeah.
that's like the biggest thing on the horizon.
Yeah.
One thing you will understand now, though, is in 2008, everybody keeps saying housing bubble, housing bubble. We had a housing bubble then because properties had been overvalued.
Right.
Right now, we are not having a housing bubble. What has happened is the bidding up process has slowed down. The valuation process has slowed down. Whereas we had, I believe in 2020, we had a 16% increase in values. In 2021, it was 14%.
Right.
I'm close, depending on what county you're in. An average good, healthy housing market has a 3 to 5% annual increase. And we're going back to that. So we're not having a bubble where the prices are going to go below what you paid for your house.
Yeah.
They're just going to slow down
It's a lot different than 2008.
a lot.
We're still, from last month to the month before, it's still a 12% increase across
Yeah.
Plymouth County. So people are not in the underwater
No.
stage. So and we talked about that, I talked about that earlier
Yes.
in my foreclosure report. But it's a much more stable market
is.
than it was before.
It is. And again, owning a home that's increasing by 3 to 5% annually is still a much better investment than paying rent.
So can you share your contact information with our viewers?
Sure. My company is Shamrock Home Loans,
Yep.
and I can be reached at Deborah Colanino, DeborahColanino at shamrockhomeloans.com. It's Deborah.Colanino. Sorry, I forgot the dot. And that's shamrockhomeloans with an S.com. That's the best way to reach me. You can find me on Facebook. You can find me, you can Google Shamrock Home Loans. You can Google Deborah Colanino Shamrock Home Loans. We're on the internet. And my phone number is 781-801-09 439. I work pretty much every day, so I'm available on weekends. I work when my clients need me to be there.
Well, thank you very much for
Thank you.
joining the show.
Thanks for having me.
So welcome back to the Register's Report. Again, my name is John Buckley. I'm the Register of Deeds of Plymouth Colony. I want to thank Deborah Colanino of Shamrock Mortgage for the great job she did describing what is going on in the mortgage market right now. Clearly, it's a little different than it was 2 years ago, a little different than it was last year, and probably will be a little different again next year. As things change, people adjust. They still do the same job, trying to get you funding to do whatever you need to do. And she did a great job describing her background, her experience, and basically how to approach working with a mortgage company. So this segment of the show is more about something lighter in nature. We talk about some of our great Plymouth County and Plymouth Colony history, some of the holidays for the month that have passed, National Ice Cream Day the 2nd, International Beer Day the 5th, Purple Heart Day the 7th, National Radio Day coming up on the 20th, Women's Equality Day coming up the 26th. But we're into summer, so I thought it'd be nice to talk about some of our summer activities in our communities of Plymouth County. Clearly, 13 of our 21 communities are waterfront communities, so there are many lighthouses connected to Plymouth County, and one of the best known one is the Situate Lighthouse. There's a great history connected with the Situate Lighthouse. Rebecca and Abigail Bates, the so-called Army of Two, have brought great memories to that community. The United States government opened a lighthouse on Cedar Point in Situate in 1811. Simeon Bates was the first lighthouse keeper. In the summer of 1814, while he was away, he left his daughters in charge, and there were British soldiers coming into the harbor. So what they did was took up a fife and drum, got other people in the town to make a lot of noise, and the British troops thought they were coming upon a militia, and they beat a hasty retreat. The lighthouse is now owned by the town. During Heritage Days, you can usually go see it, but it's a beautiful part of that section of Situate. Another very famous lighthouse connected with Plymouth County is Minot's Light Ledge, another Situate property known as Lover's Light because the light flashes 143, Morse code for I love you. Minot's Ledge Light was constructed in 1860, about a mile offshore the town of Situate in Plymouth County. After the first lighthouse was washed away, it was rebuilt and still stands today. There were shipwrecks off of that area. They decided they needed a lighthouse, and a fellow from the lighthouse service emphasized the need on Minot's Ledge, and it was built there. It's on a 25-foot rocky outcropping measuring 0.1 acres. Today, after being sold by the federal government in 2014, the property is in private ownership. So the next notable record you're going to see is of another thing happening in Plymouth County during the summer. And it's a very historic place that's been revived over the years, and that is the Priscilla Beach Theater. It's the oldest barn summer stock theater in America. And it was a training site for many famous Broadway and Hollywood stars. In 1937, it was opened. Famous people like Paul Newman, Rob Reiner, Dan Blocker, Al Brooks, Sandy Dennis, all trained there. They had a hands-on training process, and they drew many established stars over the summer. There was a period of time that it kind of, settled into not as well attended, but it has been revived. And if you have a chance to catch a show at the Priscilla Beach Theater this summer, I would advise you to do so. And last but not least, we're still doing some of our colonial records. We did a lot of colonial records during the celebration of the Plymouth 400. Unfortunately, there weren't many events that they were able to have because that was during COVID, but we had some great opportunity to show off some of our colony records. And this particular one was a mortgage that a brown cow named Bessie was the collateral. And it was money lent, the cow was given as collateral, and once again, after the mortgage was paid off, it was once again used as collateral. So it's certainly a sign of how even back in the 1630s rather, how people were able to make good with what they had and secure payment, but do it in a unique way. So those are some really great stories we have. I want to thank Lorna Green Baker and Christine Richards for putting this show together for me today. It's my 142nd show here at Brockton Community Access. Today, Mike Simmons and Athena Grant of Brockton Cable Access helped me with the show. This allows me to share information to people across Plymouth County. We share it through other local providers about what for most people is their primary asset, their home. So have a safe end of the summer. It's moving along very quickly. Thankfully, as of today, we're out of the longest hot spell, I think, in 50 years. And as we go through the summer, it'll be a little easier to get around and enjoy what in Plymouth County is a great place to be for the summer. So thank you very much.